Okay, let's get into the market analysis. We're going to go through the broad markets and we'll look at some of these FANG stocks. I want to talk about gold and gold stocks. I see opportunity there, so I definitely want to talk about that. And then we'll go ahead and get wrapped up. And I'll also cover some of these ideas I've been throwing out there recently. Triple Qs up today. Again, I don't see anything right now in the chart that tells me there's a short here. And if I don't see a short, then markets can continue to go higher. There's just literally nothing there. The only thing that we have that's still there is negative divergence on the daily chart. Still have it right there. Not confirmed, though. You can see that the PPO is pretty much pointed straight up. So this, if Triple Qs continues to rally, you're going to burn through the divergence. And, not much more to go, and you'll burn through that divergence on the PPO. So that might happen. RSI is, pretty much the divergence is there. It's just barely there, but still there. So we still have negative divergence. Getting pretty overbought for sure. When I look at the RSI daily, we are sitting at about 75-ish on the RSI. Now, yes, Triple Qs can get a lot more overbought. If you roll out and look at kind of the past history of Triple Qs, and really on the daily chart, you can see, we get about as overbought as Triple Qs likes to really get when it hits right in this range. You can see that's about as far as the Triple Qs goes before it's kind of extremely overbought. And that is just up there at about 80. So we can get more overbought. That's definitely a possibility. Again, I don't see anything here that tells me to enter a short right now. I definitely don't want to chase a long. Triple Qs has pretty much gone parabolic. Okay, it's just moving straight up like that. That can continue, but it is likely going to get reversed at some point in time. Resistance on Triple Qs is sitting, the next level of resistance I've got is right in here at about 370. You can see we have several reactions right there, 1, 2, and that's really that's really it. Beyond that, you've got the all-time highs. So those are kind of the levels I'll be looking at in the near term, is that 370, obviously the all-time highs. You get into the all-time highs and, there's nothing to really short against. It's new highs. So that is that. Let's look at the FANG stocks. Apple's forming in this bearish rising wedge now. It's kind of a pattern that's just been developing for a while. There's your negative bearish rising wedge, and there's your negative divergence. That does still remain. The RSI still has it. You can see you just kind of extend it. We really have to take out the highest point to reverse that negative divergence. So that is still there. And if you go back to the chart, we have a bearish rising wedge. No sell signal on this one until we break to the downside of this bearish rising wedge. Okay, so that's your next sell signal. Until you see that, this can continue. Apple also did take out those former highs. You can see basically took out the former high here and, kind of closing right there at this former high. The all-time high in Apple is just 1.5% overhead. So if it's going to reverse, it's going to reverse soon. Otherwise, it's going to make new all-time highs and, continue higher. I can't say for sure. The pattern right now is a bearish pattern. So bearish rising wedge should break to the downside, and it should do it soon. But that's kind of it. We closed right at resistance right here, and we'll see what tomorrow brings. I'm not looking to short until I see a breakdown of this wedge. Okay, that's really all I have on the tech stocks right now. At least the large caps. There's just, not much else going on. There's just still that mania exist. Haven't seen that reverse yet. Wheat. All right, wheat is still setting up for a bullish trade. We have a large bullish falling wedge. The wedge really started forming right in here. I can't really make the wedge anytime sooner. It started forming about there. And, this is what we got right now. So support, and you can see support. Yesterday, gapping below that support, but the buyer stepped right in and recovered it. And today, gapping up and still holding within that bearish. that bullish falling wedge. So on this one, we're just waiting for that breakout, all right, to help confirm that there's likely more upside. Big bullish divergence on this one. It's been building for quite a while, so it's a very large divergence, which very likely, typically the larger the divergence, the larger the move. So we're likely to see a pretty good sized move once we break out to the upside. So that is it on wheat. Wheat also has horizontal support. If I roll out on this daily chart, you can see we've got support right through here. It was resistance back in the past and proved to be kind of support. So, and we did just pretty much hit that yesterday, right in there at about $6, $5.95. Good strong support there. So I would, I don't think we're going much below that. I think yesterday probably was the lows because we gapped down and then we've recovered. So we'll see. We start dipping back below that $6 range, especially getting a daily close below $5.95, and we're going to need to stop out on the wheat long trade. But as of right now, it's still holding this bullish pattern, so I'm sticking with it. Gold. Okay, so here's gold futures. Gold futures is clearly in an uptrend. You can see here we have several reactions where we hit support, briefly undercut it, but so far they've held that, and that we have an uptrend line, all right? Possibly a bearish rising wedge is starting to form, but it's still relatively a new pattern, so it's not enough of a wedge to be concerned with it. We don't really have, we had negative divergence for sure right here on the daily chart. We were dropping off, okay? And that was your last divergent high, but we did get that pullback right here, right there. So, if I think on this one, you start to break down and that could be a sell signal. Otherwise, you'll continue within this wedge and continue higher. There's just no sell signals right now on this one. And then if I look at GDX, which is the miners, again, you had the negative divergence, so that was your former high. You see there, you made a high, you made a new slightly higher high, and yet momentum was dropping off. That's your divergence, your negative divergence, but we did see a pullback here. The pullback from that divergent high was a drop of about, if I can grab the right tool, about 17%. So I think that's probably justified and played out on that divergence. The other pattern that we do have that's pretty clear is this bullish trend here. All right, bull trend. They stepped in a little early, so I could see a pullback to that trend line still. That is possible. But again, it's a bullish trend as of now. And then on the hourly chart, we have bullish divergence that's showing up right here. You can see, boom, momentum's kind of moving higher, and yet price was kind of drifting lower. That's bullish divergence. And then if you mark out this hourly, let me grab the right tool, not the little squiggly pen line. You mark out your trend line here. We can kind of mark something out like about that, I think is pretty good. And you can see we did break out today on that one on the hourly chart. And then if you look at some of these individual miners, and that's really how you want to treat these. You want to just, I think it's important to kind of scan multiple miners to confirm. On Newmont, I've got this hourly chart here. I have a downtrend line. I have bullish divergence forming on both momentum indicators, downtrend line, and a breakout right there. Barrick Gold, which is kind of the second largest miner, looks similar to GDX, but again, bullish divergence on the hourly. Okay, downtrend line, and did break out, kind of barely, but it did break out. And then a lot of these ones, AEM, another one, you've got a pretty clean downtrend lines, resistance, 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 hit it again right there, bullish divergence, and a breakout. All right, kind of a bull flag as well. So we've got breakouts on these hourly charts, and you start with the hourly, we work our way into the daily, and we could be in store for the next uptrend, the next move higher. See, here's AEM on the daily. You can see we've got support right through here, hit it again, and we're bouncing off that support line. So until that support line's taken out, that's the bullish trend. So you buy at support, and I think we're going to continue higher. MasterCard rallying today, but nothing technically, no technical change. On the daily, you've got support all through here. Broke trend, back test, rejected, bouncing, but no technical change. So I think we're working our way within a downtrend. It just takes time. Negative divergence on the daily is there. It's been building for a while. We've broken trends, so yeah, we could backtest again. That's possible. Sometimes you do that for a while, but we have broken that bullish trend. So it's sell the rip on this one, and I don't see any change. At a minimum target, I think, is down at the 200-day, and you've got some support right down in here. Okay. Okay, I continue to look at some of these gaming stocks, and I see some potential opportunity for short trades here. This is Wynn. Wynn doesn't have a super clearly defined support level. I'd say it's somewhere right in here, probably adjust it down right about there. Not really well defined, but clearly have taken out that level there. And you have negative divergence on the momentum indicators. I'm not that interested in shorting Wynn. The chart's not that clear, but this DraftKings one looks a lot more clear. So you can see negative divergence right there on the momentum indicators. Bearish rising wedge. We're waiting for a breakdown of that wedge. Okay, so no breakdown yet. No sell signal, bouncing off support today, up 4.5%, and no indication of a sell signal yet. So this can continue higher for sure, but it also can just break down any day, given the negative divergences. So that's it on that one. I think there's an opportunity there, at least for a setup. No actionable trade. And then you'll see like MGM, another gaming stock. This one, you kind of have a support level right through here. And we are clearly below that as well. So, yeah, I think there's opportunity here. You can see the negative divergence that was building for a while. It's pretty oversold right now, but that was your last divergent high. So we'll watch this. There's also this uptrend here on this one to watch, which is right about there, we'll say, and then the 200-day. So a break of the 200 and that support line would be your next sell signal in this one. Otherwise, you're kind of down near support and you could bounce, okay? From my perspective, DraftKings looks like the one that's set up best, and I'll just continue to watch it for that next sell signal. Potential bounce trade here. I know it's kind of after the fact. Looks like it's kind of bouncing in the after hours, but did fill the gap here on Nike. She had a big gap up, and it drifted down and filled the gap right there at about 103.75 or so. So that gap's been filled. You're probably going to get a bounce. Buyers are likely going to step in. I would suspect you bounce and probably run up to the 200-day moving average for a test. So potential there. Just want to point it out. No real divergences telling me it's necessarily a long-term trade, just kind of a bounce trade. And the U.S. dollar, again, is, kind of giving mixed signals, I would say. Right now we have this downtrend to watch on the daily chart. I've got a couple reactions there, and we just hit it yesterday, so potential downtrend there. We do have bullish divergence that was building right through here, and it's really just been extended. These are divergent lows, so we'll watch that. But for now, the downtrend, I think, is key. A breakout above the downtrend would be bullish for the dollar. That'd be negative for gold stocks and gold, and probably negative for the market. But as of right now, still holding that trend. And kind of going along that theme, we'll look at interest rates. They pulled back today a little bit. Not a lot, but definitely pulling back, kind of near the 200-day moving average. And I don't know what happens to my lines, why they continue to fall off. But you can see here, here's the COVID lows. And you kind of mark it out. You kind of have something right in this area, it looks like, where you have a couple reactions. COVID lows, you got a reaction there, couple right there, right in there. So still holding that bullish trend in the 10-year interest rates, and we'll watch that. Momentum has clearly been dropping off. You had a negative divergence right here, so that was a divergence, and it did, we did kind of sell off from there. No real divergence, at least no real negative divergence right now. So we need to watch this, watch the trend line. There's a potential up trend line right here to watch, something like right in here. And we're kind of wedging, all right, maybe like a triangle. So break to the upside would be Likely negative for tech stocks, bearish for the market as a whole. Break to the downside would be bullish for tech stocks, bullish for the market as a whole. Okay, that's really all I have. I'm going to go ahead and wrap it up, guys. Get the video out. Catch you on